Morning traders, welcome to the Traders Lab. I'm your host Tom B. Appreciate you stopping by the lab today. We have a lot to talk about. First, we're all familiar about the conflict that's ongoing in Iran, with Iran, and we've had a lot of geopolitical risk the last, of course, since the war started, but also we are subject to very random inputs in the sense of comments, tweets, news conferences, politicking, and the rest of it. And because of that, that gives us more volatility, more opportunity, and also more risk. Headline risk is something that is always part of trading, whether it's an economic report, a comment, or anything that happens that can disrupt the auction, or you will, the pricing, which is the pricing mechanism for creating valuation. So when random inputs come into the market will respond. Sometimes it's like a knee-jerk reaction or even excessive reaction. And then once that is digested, if you will, by the participants, then the market can kind of go along on its merry way. But for day traders like us and those of us who are trading highly leveraged instruments, it does present challenges for risk management. So always, when you build out a trade plan, risk management is really the job number one. It's not the one trade, it is all the trades, and it's not about quote winning on a trade. It's about being here under certain conditions that will happen because that's the nature of the business, that you're here for tomorrow and the next day and the day after. This is not about trying to hit the ball out of the park or be right. This is really more about sustainability, and that's the purpose of TraderLab. And welcome all of you who are visiting the lab today. Let's get going. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only. Thanks, Marty. And should not be considered specific investment advice or recommendations. How we doing in YouTube? Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is based on structured trades, and these are available to everyone in the Bookmap Discord TraderLab community. One moment here. I'm trying to see if how we doing in YouTube. Are we percolating? I don't see anything in there. So if you have questions or comments, please post them in YouTube, also in TraderLab. I'll do my best to get back. Are we okay in YouTube? I'm not seeing anything there. Thank you. Okay, great. Well, thanks so much. And those of you who are visiting in YouTube, well, good morning and welcome to the TraderLab. Now, let's talk a little bit about the condition of the market. Uh, of course, one moment, please. I always like to start with the higher time frame because in reality we are trading. Even though we're day traders, the idea is to try to align with the dominant side. Now, of course, as day traders, it's going to rotate both sides, it's going to squeeze. And remember what the way the market works, and all time frames are rotations. Market goes down to go up, and this was a squeeze. Market got short here, got overextended. Inventory was out of balance, and what happens is it's almost like, think about this: the market's going down, short, 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 short. Well, what happens if we run out of sellers and then we have all the buy stops? You see, so that's what creates these rotations. And then if you're short and we come across the range, and this was resistance, by the way, and then we know there's buy stops up here above this high for these guys, position traders, and up here. Well, then we come up, and what do? We take these guys out, we take these guys out, and then if we run out of buyers, what do we have now? Sellers. You see, in other words, the short, we have longs in here who are squeezing, and we have buy stops or buyers up here. So buy stops are buyers, short squeeze is buyers. Now we have to also think about it from the other side. If all we're doing is taking the weak side out here, then we can continue lower. Now, of course, the thrill is naturally, how do we get there and what do we do? Well, if we this is too high. This is called value area, and we make lower value. Then the anticipation is to go lower. However, day before yesterday, what do we do? Well, what do we have in here? If we have longs in here, we're going to have buy stops here, buy stops here. Well, if I come up, and yesterday was, we took stops out here and then we came back down. So today, so the way I kind of think of these things, and now again, from a higher time frame perspective, if you will, the market's always rotating. Doesn't have to, but you can see how it typically works, rotational trading. So we trade inside these rotations in all time frames. If this high, when we opened higher yesterday, I don't remember yesterday because I can't remember. I do a lot of trading, so it's almost like be here now. But this is where the stops were. And I believe we opened higher, and this is high probability, and this was low probability yesterday. So the idea yesterday was to come down into this range, and we had a target at 6607 yesterday. And those of you who follow the stream, we were talking about that. And we didn't quite get there yesterday. But what do we anticipate? Let's come back to what we anticipate. If we get shorts out here, and we come up above here, and we can't get the shorts here, then what? Hasta la vista, we'll see you much later. So now let's come, and there's one other thing I want to show you, then we'll move on. These are called naked volume points of control. Now, what is a naked volume point of control? Each RTH session has one price area where the highest volume was. And think of it like shopping. So if a price gets too high or too low, we can leave it and then come back and test it. So yesterday we were targeting 07 half. Okay, so that's yesterday. We didn't get there. Now today we open. Let me try to remember where this was at 65.93. So down here, so we have a gap. Now, if you go to your context grid sheet, now this is important. Oh, there's one other little piece. This is called the value area, this yellow box. Now, a value area is where 70% of the volume took place yesterday. So that's considered the fair price because of volume. In other words, most of the business was done in here. The retail price yesterday was around 66.39. So what I know is this is the fair price, and I also closed on the low edge value. That is suggesting, and I always like to use the term potentially, that this might be too high, but we can also come back and check it. I know that also. So I know just for the same reason I can come to 07, I can come up here. Value area low. So we open lower. Now let's go to our context grid sheets, and then we'll move right along. Is everybody with me so far? And if you are visiting in YouTube and you've been in the TraderLab or you are in the TraderLab, get your context grid sheet out. This is your first guide to the potential based on the open. Now none of this works in a vacuum. We have to be conscious of what is the higher time frame. I think down. So for example, yesterday all I did was take shorts. I think maybe I think yesterday I took a long first to take the stops out here and get the ETH high. That's right. So it was a long, only one long trade, and then it was shorts for me the rest of the day. Other traders in TraderLab trade, different time frames. I tend to get in and go for the Barca Lounger trade. So probe the market, get in a location area, and then trade the range. So getting our context grid sheet out, the first question. Now we're in a downtrend. Now maybe in your time frame it's an uptrend. That's okay. No debate from me, because this is all based on your time frame or plan that has an edge. So that's all cool. The first question is, if we're opening in a gap, and that means what do we have if we open in a gap? Well, we got shorts in here. Okay. And they're going, what's happening? And then we have, if we open in a gap, and the open again was down around 93. So like here, if I open here, then what's my possibilities? Well, I'm going to have sell stops under here, but the ETH inventory is short. So you got shorts, shorts. Now, if you come in short, here's the possibilities. And this is something we see over and over, and you'll learn this in TraderLab, and you must put these things into your trade plan. In other words, is elements to consider, not to become myopic and forget about. Okay? All right. So here's what we know. The market is short. The trend is down. If the market is short from yesterday and the ETH, then what's the possibilities? Well, we can gap and go. That's one. Okay. And there's over a 98% probability to take out ETH high or low. By the way, I'm sorry, 91%. Don't shoot me. And you have to bet these for yourself. So if I open lower outside a range, I know I have ETH high or low. But right away, I look, the ETH high is 66.47. Write that down, 66.47. And where is that? It's right by settlement. Well, if I'm below settlement, I'm below the ETH high. Might that suggest that the ETH low has a better probability? In fact, based on statistical probabilities, and again, past performance, not indicative of future results, I have to say that it's a requirement. You have to bet everything for yourself, even the structured trades I share in TraderLab, which are all welcome to. There's no cost for this. 72% probability we take out the ETH low. Well, if I perceive the ETH high is too high, doesn't that tell me something? Doesn't that tell me that in spite of what might happen, the lean in alignment with the higher time frame is short? So, and here's the next one. You'll like this too, maybe. What's the probability of filling the gap, getting to the previous low? 68% probability to go there. And value area low. This one's a biggie. Why? If most of the volume took place here, and this is the fair price from yesterday, I might come back here, but I'm out of value. So, and you'll see how this all fits together. So about a 70%, 68% probability of filling the gap. So starting out, I already know that ETH high might be too low. I'm opening in a gap. The market is short from yesterday and the ETH. What can I anticipate? See, this is the logic. Our impulse is that it's going to zero. I got to sell it now. Impulse. But what do we know? If the market gets out of balance, in other words, too short, and I now have shorts in the market from the ETH and yesterday's RTH, I might, and this is the part of the thrill, I might get short covering and rebalancing. Is that making sense? So coming in this morning, I have two trades. I have short early, and then if I start squeezing, then I'm looking at the gap. And I couldn't tell you which one. This is part of the thrill. So I know I have 66.07 from here. And if I open below it, I can come here, and if I get across here, I can fill the gap, and maybe, wherever it goes, it goes. However, what's the trend? Right? South. So it's a matter of time frame, and how do we get there? Do we get there? And the other part is who knows. So we go from there. Now let's go to Bookmap. So now this is that RTH open. Now here's what I start out looking at. Now this is our 07, so this is the retail price. This is the gap, if we get there. And then we have value area, which is here. And settlement in yesterday's volume point of control. Gotta label this thing, hold on. Naked volume point of control. So, and to get to that volume point of control, the probability is 30%. You see how statistics might help you? And again, statistics have nothing to do with what will happen. They have to do with what might happen, but the context and what is context? Trend down. So other than counter rotations and squeezes, the primary trades for me are shorts. It's been that way for I don't know how long. I guess since the trend's been down. But I also trade both sides. Or, and I'm only talking about me. I'm not saying this is good. I'm just saying is I tend to I trade. Well, let's just say for the TraderLab, what I try to do is I'm trying to stay oriented to dominant side, so developing traders can not get hung up in the short-term chop and churn of the market, but become more strategic and become more disciplined. So my objective for TraderLab is to help traders sustain themselves so they can build more opportunity, but not blow themselves out. And of course, past performance, as they always say, is not indicative of results. So getting to the ETH high or low has about a 91% probability. My first trades are going for this. So I start out, and there's stops under here too. This is a very juicy target. So let's look. So I'm going to show you the first trades I took, and it is what it is. So I know I can go here first, and I got sell stops under here. And also, it's very interesting that the ETH low and these stops at 74 are in the same location. I know this is important, and I'm thinking, well, I can get under here and then come back. Maybe. Don't know. So let's talk about the first trades. And if you have questions, please post them. I'll do my best. If you're in YouTube, you have an open invitation to the TraderLab. There's no cost for it. It's open for everybody. Now, here's another thing. This is the ETH volume point of control. What this really is in the terms of the auction is the fair price. So we had yesterday's fair price. Target 07. Our yesterday's fair price is up above us, and we have our yesterday's low here to fill the gap. So, looking at this and going, well, if this is too high, an overnight volume point of control has about an 80% probability. So I'm looking at this, I'm going, well, we might test this and then go down, get to that ETH low. So my first trades are short. And don't forget, I'm aware that I have the gap and a 67% probability. It's really a matter of what do we do first? Do we go down, then come up, or do we go up and come down? And that's part of the thrill of randomness, so I have no idea. So let's take a look at the first trades. Now, when we open like this, what I was looking at was I'm saying, well, I could very well get that short covering. In other words, the shorts from the ETH, remember the idea, shorts from ETH, shorts from yesterday, and if I get this gap, think about it, if you get a gap and you're hanging out, or you're short in the ETH and you wrote it down, might you take some profit? Just a question. And you might, or you might just sell more. Who knows? So for me, my first trades are short. Let me show you. Now, I also understand because of the gap that we can get that buying, and then I'm waiting for this opening swing high, this, to get taken out, and I have my overnight volume point of control right here. So this is my fair price. So what the market can do is if I get that selling, and it doesn't have to, it can just, do the Acapulco cliff dive, I have a reasonable shot. If these sellers are like the late sellers, let's say they're the guys who weren't in and they go, oh, I got to get short. This is going to zero. Trend is down. We got to get short. Well, opening swing high is here. So if we get short here, what by that I'm saying is if traders get short here, new shorts, think of it this way, new sellers, might their buy stops be over here, the opening swing? So this is resistance. That is resistance, the volume point of control. So right here, it's like, what's happening? And I'm feeling FOMO. I'm starting to talk about my emotions because I had to learn about them and learn to manage them. So this is what I know. I know this right now is my resistance. I'm going to start here. So I mark these. I call them variable high volume nodes. The whole idea of this is just to keep track of the auction. because this is an auction. Now, as it's going down, I'm going, oh, this is great. I should have got short there, right? Well, I can't get short there. It's like not even a second. So that doesn't happen. But I can watch this. Going lower, going lower, going lower. Now, this one on the bottom, if I break above it, it becomes support. Now, and again, what I'm doing is I'm trying to get short, but I'm also very wary of the condition of the market, which is short. And what that means is if I join the shorts, I am trying to get risk neutral and come out the bottom and get to that overnight stat before getting abused. And I know my opening swing is here. So this is where my trade came. This is where I was looking for my short. So here is resistance, and the opening swing is right here. So I'm looking for it to pop. Let me show you. And this is a trade I took, and it is what it is. So let me show you. Now, so I anticipate this. So I'm aligning the buy stops that are here, and this price is too high. This price is too low down here. So I have, you might say, support and resistance is a way I look at it, and I'm using the auction. As soon as I pop right here, I see absorption here, and it's location based, you see. So right here, I have buy stops. So there's the stops coming out right there. And I see the iceberg selling, and it's a location. If I can break under here, I can sell it, and I'm coming out. The goal is to get to the ETH low. And I have this alignment. I want you to just see how this trade shows up. Now, the other issue, and I want to come back to it, is the market is short. So I'm looking at it, I'm thinking, this could be big trouble. But I have to take the trade because I have no idea. So here, I take my short. I don't get filled until in here, So my stop has to go over here. I didn't get in this thing until really in the hole. It just ran. It's one of these things where you push the button and you wake up over here. So, okay, now I know my buyers were here, but I have my ETH low. So anyway, that's my target. Sticking with it, who knows? So I didn't get in till here, and then I'm trying to get risk neutral, which I do. My stop is here. And now I have a sweep. Right here, I see the sweep, and this is problematic. Let me explain what's going on right here. This right here is resistance. Let's look at it. This is an order flow, call it phenomena. For me, it is a structured process. Here, let me show you. Now I'm going to drill down a little bit here for you guys, and I want you to know today is not my favorite day. All this news, I found it more difficult, more challenging than trading typically is for me. But I also know that this is just the way it is, So anyway, this is too low. So think of this like support. This is where my buyers came in. My buy stops, don't forget, for these guys is up here. So you kind of see the logic. And this was the retail price that we left behind. The auction or trading, it's kind of a shopping thing. In the ETH, that's the fair price. So 80% probability to go there, 90-ish% probability to take out the ETH high or low. I'm going for the low. 80% probability to go there. So everything lines up here for my short. And then it's, and again, notwithstanding the possibility of a squeeze. So, and I ended up, unfortunately, getting in here. Certainly was trying for this, but that's where it ended up. And then get risk neutral. So the risk was from here to here. Get risk neutral. Sweep. Now, the sweep is a problem. What the sweep suggests, and there's one here, didn't do it. Okay, I'm happy about that. Very thrilled. I get the sweep here. My resistance now is there and there. So this is my resistance, and I'm still, because of just the circumstances, this is where I want it to stay. When I say want, structurally, I want it to stay under here. Watch. And remember what my target is. So I'm going for this, okay? There's my resting liquidity. And right here is the teeth chatter because now I have my sweep. Now right here we can come right across, of course, and throw Tom under the bus, or I get the sweep teeth chatter. If I can hold this and this, I'm okay so far. Watch. This is resistance. See it? So, subject to, here's what we have. We have this, and I have this as resistance. So, don't forget, here, right? So this is resistance. This is either another short or nothing. All right? So we have this, resistance. I got to label it, by the way. So what I'm doing is I'm using the auction in the high volume areas as shopping. So I'm a shopper. You know, traders are shoppers. You know, the old saying, buy low, sell high. You know where that concept comes from? When you go to buy your tuna in the supermarket. Buy low. Oh, it's on sale. You know that. And if the price gets too high and some buyers are buying, but we're running out of buyers, what are the sellers going to do? They want to sell high because that's where they make more profit. And then if we run out of buyers, the market comes back to the fair price. So if we get too low on sale, we can come back to the retail price. But if this new retail price is too high, same as that one is too high, I can then push off. If I cross this one, I can come back to this, or wherever it comes, it comes. I don't know. This is actually another short if it's in your plan. Whatever you're doing, you're doing. It's not up to me. And now this was exciting. I was very happy about this. This is a key level, 79.75, comes from the higher time frame. Who knew? And then this, okay. So what happened to me was, I got scaled. I got taken out. So when I see this, it's like, whoa, wait a minute, and that's what it was. Because I came over this and then off we went. So now I'm starting to look higher up. I'm looking at the liquidity. I'm looking over in here. This was the full session VWAP. I'm thinking, well, maybe I, look at this to sell it to come back. What was this, So anyway, not so much. Now, '07 was my target coming down. Well, coming up, it's the same thing. It's a target coming the other way. So now, right here, let me show you what I did here. You'll see. So I'm looking at this and I'm going, well, this was the target yesterday, but Tom, wait a minute. Before you go selling, and I was looking at this and I was thinking, I'm going to sell this. And then the alarm bell went off and said, wait a minute, you've got 68% probability, and this is not what you call chicken feed. This is, look at this thing. So what are we actually doing now? Surprise to me, because it's always random. What are we doing? We have responsive buyers in here, or a short squeeze. Call it anything you want. Short squeeze. Okay, what are we going to do now? I don't know. So I looked over here, and I'm going, well, and this is where I was looking at it. It was the overnight mid, I thought it was. Let me show you. Yeah, overnight mid. Now, the overnight mid has about a 68% probability. This. So I looked at this, and I saw the reaction here. So I'm thinking, 68% probability to fill the gap. Overnight mid, about a 68% probability. They're equal. But what else do I know? Let's come back to what we know. Market is short. So I was really very close to taking a short here because it just came to location. But sometimes you have to think about why might liquidity be resting at an area that has statistical probability, same as this, because they want to do some selling up here. So anyway, teeth were chattering on that. I didn't do it, and because I have to remember, this is where things get. It's very easy to get myopic, like this. I right here, I'm looking at this. I have this, and I'm going, should I sell this? I have this conversation going on in my head, and all it's doing is, if I sell this in my time frame, I'm going to get blown out because I'm not trading for this. That doesn't work for me. For me, I'm trading the 67% probability to get into yesterday's range. Now, here's another piece that's very important that we never talk about. Well, I'm going to say I talk about it, but there's so many elements here. Let's remember what's really important over here. The fair price from yesterday was here. We checked it in the ETH. I'm not paying that. The value area low, where 70% of the volume took place, is right here. So this is what? Too high? Too high? Last auction, ETH, too high. So what I know is this has the higher probability because I've already tested. This is where things you have to be thinking. If this, then that. If not, then what? So if this test in the ETH is too high and we check this price and we open down in the, wherever it was, down somewhere down here, then what? South. How do you do this? 67% probability. Put your helmet on. So I got to wait for the gap fill. So I did not get long. I know other trader in TraderLab did. That's a nice trade. For me, no, because I want to align with the higher time frame. So what I'm doing in TraderLab, and I want to remind you guys, I'm not here to chase the market around and I don't think about P&L. I think about process and probabilities. Okay? So basically, what I'm trying to do is get short. So the shorts were down, so no longs for me. I look at the longs as opportunities for continuation shorts. And I've changed what I do here in TraderLab, and I can't tell you how long it's been. I used to show you much more activity, but what I found was developing traders would start trying to trade both sides, and that was definitely not good for them. So you got to be able to trade one side. So here's our gap fill. So I did not take any longs, basis the stream here. And for me, what I want to do is, since I know what we already rejected yesterday, don't forget, in the ETH, I'm now working on where the heck can I get short. Here's my gap, and here's my liquidity. So right in here is where I'm starting to stock a short. And I have to be really careful. When I see this kind of stuff, these are triggers. That's a trigger. As an example, it's just a trigger. This would be a short if it was someplace else. But there's an old saying that you might have heard, and it's not from trading, it's from real estate. It's called location, location, location. This should be in your trade plan, okay? So this is where I'm trying to go, right here. So there's my sweep. This is a trigger, okay, right here. So this is my first, well, not my first, my next short after the down at the bottom. Still going for the low to come out the bottom and get to the ETH low. So I am basing my plan on higher time frame and the last auction, which is the ETH. Okay, so this is my short, and here's how I'm doing this. I got resting liquidity. This front runs. So, and I'm testing this. Now, of course, like anybody else, I take stops, and I'm very excited about it, just like you are. This is the trigger right here. So right here is the sweep into the liquidity. There's the icebergs. There's the break. Now, how about this? If I sold it here, could have sold it here. Stop has to be above here or above there. Let's assume I put it here. I get another sweep. I get a sweep, I should say. I get a trigger here. Same, this trade, this trade are the same trades. This is the short. So the short starts out here, and then I have liquidity come in here. So this would be where I'm going. And let's see what happens. Get risk neutral, whether you're here with a stop here or here with a stop there. Risk neutral. Now my job is to put my helmet on, and I'm going to be going. I'm trying to get down the bottom, you know. Risk neutral. Now watch. Now I come back here. I believe this is news related or something, you know, there's a lot of geopolitical risk and news risk, you know, as you guys are familiar with. So you really have to focus on getting risk neutral. Okay. So anyway, this is the short and risk neutral. Now let's watch. I get this, and you know, my jaw hits the desk, right? Where was my stop? Right up here. Get this, get this. It looks like another short to me. Okay. If you're running tight, you get taken out, you would scratch. If you're giving it more space, and this is trade plan specific, let's look at these triggers. Here, reach here, into the liquidity, another short, stop would go here or there. This is something you have to vet. This is called VPOC migration. This kind of throws a little bit of a wrench into the whole thing. What this is suggesting right here is that this is the new retail price. So this is where the brain starts going into the Cuisinart, because it's like, well, this is not good for me, because what that might be saying is this price down here is too low. See where the liquidity is? So I'm looking at that and I'm going, and that's all I can do. I go, because I don't know. Remember, this is not a business of prediction. It is a business of alignment. So what I'm trying to do here is I'm holding on to my short here, or if you get taken out on this, put another short on, get risk neutral. If you get taken out here, it's the same trade. These are all the same trades, but we have big volatility, you see. This is another short. So all these are shorts, you know, and I really felt like I was getting hit with a bat, you know, because it was pretty hard, you know, to hold these positions, news and all kinds of news risk. And I'm just going to tell you how I, quote, feel about it, frustrated. Getting risk neutral, getting taken out, getting risk neutral, getting taken out. Short, 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 you know, taking these shorts. Now, my stops are a little further away, but let's assume I'm micromanaging, which is what most of you guys do. I don't do that. I found that trying to be risk adverse doesn't work for me. So, here, let me show you this. So, I'm leaning on the following. This is my resistance, this up here. Okay, so this, and there's this also. So I know I got my sellers, and this is where OrderFlow comes in. This is called the heat map, and it's showing me the limit order book. These guys are in the book. These guys are in the book from over here. So this is pretty much my main outside edge, and there's no precision in this. One of the things I always suggest in TraderLab is when you have liquidity like this, if you put your stop like, because you're risk adverse. By the way, we're wired to avoid risk, but in trading, we have to take risk, and we also have to think like retail traders, but not act like them. Risk adverse traders, don't forget, we are predisposed to that. Put their stops there. I know I can come out here and pick those stops, and the sellers that are here, these guys, will use that inventory or liquidity, like here, 149 buy stops coming out. Thanks for playing. And they'll just sell it again. If it comes up here, 132 stops, 68 stops, sell it again. This is my resistance, but I can push, So when I'm, and these aren't recommendations, when I'm taking these trades, I'm not micromanaging. I've taken too many stops, worried about one or two ticks, you see. So anyway, these are just shorts. And this is my obstacle now because it came up. So now when I'm doing this one over here was down to here. Okay. This comes up here. It's still shorts, but this comes up. This is very disturbing for me because of what it says. Now, what it says is I can revert. In other words, I can come out, I can come back. I can come out, I can come back. So for me, again, it's only shorts, and this is my obstacle. I got to get below this. So what you're seeing is I come out, and on this one, I looked at this, I said, I break under it. This is good news. Off you go. Not so much. Test. Short to where? To there. Trying to come out the bottom. This now is support. Break high. I'm telling you, I wanted to get that air sickness bag out. All these are shorts and all these are problematic because this is really your support, your resistance, your support. Okay. And I'm concerned. Now, the fact I'm concerned doesn't mean anything. It doesn't change the outcome of the trade. I think it's our nature, of course, but I'm seeing structurally what I perceive to be a problem. So I just put my trade on, follow my plan, and donate to the Floor Traders Retirement Fund. That's all you can do with this. So short, scale, and again, and when I put a trade on, just something psychological to share with you, I assume I'm taking a stop when I put it on. Watch. Where's resistance? I'm telling you, I thought stepping on a rake would be better than this. Can you see why putting your stop here is really problematic? And I believe this is all news-based here. So what I tend to do is if I know this is like resistance, I'm out here. And it's not a recommendation. I take stops. Everybody takes stops. So this is an example. This is resistance, but this is where my stop has to go. I don't put it here for this reason, right here. More stops come out. Now, here's the other thing. Let's assume I get stopped out right there. Don't forget I'm risk neutral, right? So if I get stopped and I break low, I can put the trade back on here, but my risk is out to here. And I'm okay with that because of my risk reward. My target coming down then is the overnight volume point of control, coming back to balance. And don't forget the higher time frame trend is down. So all I've been doing, other than, actually I haven't taken a long here, at least TraderLab long. And I'm trying to come out the bottom. Now another key thing is this. This is a low volume area, low volume node. The way to think about the auction is the way it works is what's too low, what's too high, what's fair, high volume, right there. And if I leave it, this, and break away from it, I can now return here. And to these variable high volume nodes. Now the lowest one I think is here, I think. Let me show you how I use these. So if I know I've got buyers here, and I come down, I will target these. Because, why? because if too low is down here, right? I think it's this one, right in here, this. Then coming down, if I found my buyers and this is too low, then I can come back and check it. I can check that one, and this. But don't forget, trend down. So what am I doing? I'm only short if I'm aligning with the higher time frame, as opposed to a scalpy type trader. You know what I mean? Let's look at some other behavior here. So this is a target and there's a sweep. Now what happens here is I'm coming down and I'm going for this, right? So I manage my trades. Now let's go take a look at some other things that we can talk about right here. Maybe we'll get into real time soon. If I get, this is support, break below it, it becomes resistance right here. They come back in here. Subject to my plan, I can cover here, or I can manage my trade out here. And we have all this news and nonsense going on, you know. This is resistance. In the TraderLab, this is a more advanced structured trade. This could be an ad, this could be whatever you want it to be. And the risk is above here. Then what I'm trying to do, again, is get under here, actually. So all of this is short. Now I get VPOC migration. What does that tell me? Too high. I'm outside of this distribution. The outside edge or low volume node is here. Notice the alignment. Let me draw this back over here. This is resistance. So as long as I'm under here, I can lean on the short side. For me, hold on one second. I got to turn some stuff on. Let's see where we are in a higher time frame here, and then we'll get right back to Bookmap. So you can see, and where we're trying to go is ETH low is right here, and there's sell stops. My target is 60 for the day. Not a recommendation. Clueless, but not ignorant. Watch. So resistance, outside edge, see low volume node. Once I get under here, I've rejected everything above me, and now the trend is reasserted. You know, see, all we did was rebalance, squeeze, and trap. So the longs get in here. That's the fuel for going down. The shorts from the ETH and yesterday's RTH are the buyers. That's called responsive buying. But we already knew before the RTH opened that the ETH low had a higher probability because of context. So this is where we were trying to go. And that was the same target from earlier, you know, when we had the open that didn't quite get there, you know. So now I have only taken a couple of trades, you know. How many do you need? Now I know it's very easy just to sit here and trade your brains out and blow yourself up, right? That's what most retail traders do. So what needs to happen, at least what I've found, and by the way, target is here. Don't forget 60 is the next target down here. This should be HVN, I think. This is a target, 60 half. All right, so that's where I'm trying to go. It's not a recommendation. Sell sweeps suggest counter rotation, and look at the liquidity that was laying here in the book. So depending how you use order flow, you would have a limit order here, and now we have this over here. We want to watch this. Now we have a couple trades in TraderLab, and this is something you got to be very careful with right here. We have something called the IB continuation trade. It's a structured trade. And what it would be, now we have to be very careful here because we got the sell stops under here. This, I call that fuel. So, and I got this. So I've got primary targets except 60-ish. So this is another target, but this is something you got to be very careful with right here. So let's look at this. Let's use a similar process that I've been showing you. We have this structured trade. Now the thing about this trade is, if we get short here, this is where we have to come to clear. Not a recommendation. So what you'd be doing if you're in TraderLab, you know these levels are important. You know this level is important. It is the highest volume right now, I believe. Yes. So this is the new retail price. And what does the market tend to do? The market tends to find where's too low and rotate back to fair, and then potentially come outside and rotate back to fair. So my plan, and I'm not saying it's a good one, and these are definitely not trade recommendations, is only shorts and short continuation trades. So the IBC, this one, is a structured trade in TraderLab. It's a continuation short. It has more risk attached to it because we have buyers here. So I know if I get in this trade and take this structured trade, I got to get risk neutral pronto, because these buyers, and there's the sweep, all this says the upside rotation. So if I see this and this and this, then I can anticipate that. Now my structured trade sets right here, and I can sell this, but I gotta get risk neutral. And then I have to see if we can clear this, and then I'm going to 60 structured trade. When I say going to, I'm going to say it might go to. So we'll see what it does. The other thing about this is, let's come back to the concept. Where are the shorts? Here and in here. So if I come back and I can't, and this is where my selling is, this is my next trade, I can sell this, but I have to be conscious of this. So my stop has to be here, and now I got to get under this, and I would be scaling either to get risk neutral 1-to-1 or here where the buyers took control. So either here, not a recommendation, or strictly a 1-to-1, whatever. So this is where my buyers were. If I can break under here and potentially hold it, then I'm going for my 60-ish or lower. Let's go take a look down the financial food chain and see if there's anything else hanging out down here. Anyway, scale would be here or fixed scale, subject to plan. None of these are trade recommendations. I'm just sharing ideas in TraderLab. Going to the higher time frame, 60-50. Got that one mislabeled. Should be green, not red. Notice the behavior of the market right now. $60.50 is the outside target. And notice what happened here. So if you took the IB continuation trade, and these are in those 60 PDFs I've shared with you, this is what you got to be dealing with, okay? So it's either 1-to-1 ratio or there, and it never has to get there. If I can get under here, then the, shall we say, as they say, the trend is your friend, right? Okay, I'm getting a question in YouTube. Can I go through this trade right here, this structured trade? The way this operates often is the market's made up of auctions or distributions, and it happens in all time frames. The outside edge, once we left this and ripped to the upside to fill the gap, then the outside edge was this low volume. So we were going up, down, rotating up there. Once I break below here, and notice what else is here, the 07, right? Once I get below this, so it's only shorts, but the higher time frame is short. Now, if we're looking at this trade here, I'm aligned with the liquidity, if I break below, this is an order flow trigger, and it just happens to be aligned with the IB continuation trade, structured trade. So I got this, and I have what they say in real estate, location, location, location. This is my short. The trigger, let's look at the microstructure. So, for me, if I don't have to take 10 trades in a day. I could do 3, 4, because I trade the range. And what I was talking about yesterday, those of you, who are here regularly, your trading plan has to align with your edge, really. My edge comes from large rotations and not from, there to there, that kind of stuff. That doesn't work for me. So I've gotten to a place over now, it's 47 years, I guess you might say, so it's taken a while. But I used to be a position trader, don't forget, when I was managing funds. So I'm not a position trader, I'm a day trader. This is a continuation right here. Or trade management. This. It's not a trade, it's just a thing of interest. In here, I've got my sellers here. This is my key location. I have my sweep here, which suggests potentially higher. In this little structure, I'm going to open this up and show. I'm going to take you down with the micrometer now. We're going to get into something. You guys always think of time frames, right? Well, there's no clock here. What there is behavior. Let's go look at this behavior. So in here, now, this is a high volume node. So it's like this. It's on sale. I'm not paying that. Fair price right here. This acts like that volume point of control. This is the auction. So it's, you got to be kidding. Oh, yeah, but it's a heck of a deal. No, I'm not going to pay that. Yeah. And this here is the high volume just from here. So this is a consolidation. When I break low under here, I had a sweep. When I get below it, this is resistance, and of course, that's resistance, and that's resistance. This is my trigger. I can sell this, I can sell this, I can sell this, and my risk is either there or there. Too much, don't do it. Right here. So let's look a little further. Let me take you one other place. Let's just look at this. Structure. Now, these are triggers. Now, if the market moves away from you, let's say like this, it comes out here and you're going, is it going to do? What's it going to do? Now, it breaks here and it triggers again. So I have multiple time frames triggering here. This is and don't forget, this is the location. So we already know where it might go and what the trade is. And then you either take your stop with the rest of us or you're going to get risk neutral. This is also a short. So it's here. Oh, you missed it. There. Risk to there or out there, up to you. And then it's get risk neutral. Over 90-ish% probability to take this out, remember? And then south of the border. And we're looking for 60 wherever that went. Where are we? Well, let's see. Anyway, then it's trade management. So your shorts here, remember what this is. This is where you would scale or whatever. Now you're just hanging out. Your stop could stay up here or you can trail it. Let's look at more microstructure. Just going to show you structure. Not saying anything more about it because who knows? Break low, trigger, resistance, short, scale. All these are TraderLab possibilities or trade management processes. It's all up to you, not up to me. What I share in TraderLab, the purpose of the TraderLab is to separate the fantasy of trading from the reality. It's not about action and dopamine. It's really about strategy and probabilities. That's all this business is. This volatility and randomness will take you out of the business. You need to be structured. Market's random. And then it's really a matter of organization. So what do I know about this? This is an order flow trigger right here. This is more advanced, going for wherever it is. This. See the liquidity coming in? This is our target. All of these, you have to vet them, are shorts in the TraderLab. This, 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 or trade management opportunities. They're not initiative, they are for you to vet. And this is where we're trying to go. Does that make sense? This is TraderLab. Now, I'm not saying it's does that make sense? How we doing, guys? How we do it in YouTube? I hope this makes some sense. You know, trading is random, guys. So we can't get certainty and we can't get risk out. Can't do it. So what we have to do is design a solution for uncertainty, randomness, and focus number one on risk management or getting risk neutral. In TraderLab, I share the idea of a two-lock configuration. Job of the first contract is to buy the stop on the runner. That's the minimum configuration. Now, obviously, if you've been in TraderLab and you build out a business plan and you have an edge, you're going to trade more contracts and have ads. So if you're advanced, that's a short. That's the initiative trade. This is right here. You could be adding, or this is really a nice ad right here because of this. So this is an ad, or it's trade management and you're not adding because you're working on building your edge. There's your sweep. There's your location. Let's see if we get a reaction. Let's just see what it does here. Is everybody tracking? Does anybody have a problem? This is a structured trade now, going from there to there. Me, all day long. It's a 20-point trade. How many trades do you need? Oh, I see there's a comment about a squeeze risk. Well, every moment you have a squeeze risk. So it's trade management. Doesn't matter. By the way, what happens if the trade, this is it? Now, this is where my target is, right here. And on my current short, that's it. Finito. Out. Why? Why? So, squeeze risk, there's always risk. Nobody knows where the outside edges, the high, the low, where any rotation will happen. It's all random. This thing can just keep going. And what I do, and I'm not saying it's a good idea, is I trade the locations. In other words, auction-based levels. Now, if I break under here, then I'm going to be looking what happens here. But this is my target. Okay? So, and unless I trade after the stream, I could be done for the day. It doesn't matter to me. I mean, how many trades do you need? See the range? So what I was starting to say is my plan is larger rotations. If I'm working a short from up here and I'm going to 60, let me ask you, how many of these do I need? And here's the other part of it. I'm not saying this is a good plan. The reason I trade the larger rotations is just like you, I take stops. Not thrilled, but you know what? It's overhead and cost of production. So what I found for me is I don't have to, if I expand the range and trade a higher time frame, if you might want to call it that, even though I'm a day trader, that percent R is going to pay for stops that I will take at times. Sometimes, but I'm not looking to take a lot of trades. I'm not here for the action. I'm here for the profit. So less for me is more, because if let's just say my risk is 3-4 points, whatever it is, sometimes more, with a number of contracts. So I'm going to take stops. And of course, you know how we all emotionally are attached, but I've become less attached to outcomes, and I've changed my experience from a right or wrong to following my plan, which is the only right or wrong, and that the overhead or the stops are probes. So trading is a random distribution of outcomes when you have a statistical edge that favors you. It's no different than gaming like casinos. So what do the casinos do if they pay a gambler? What do? Right? They just deal the next one. Well, I know for me to extract my edge, I just have to keep playing the game, that I have a statistical probability that favors me. I don't know about random distributions. I don't know anything. So if I know I don't know, same as the casinos. Notice why this was a target? Because I got a level. Now, is it the low of the day? I have no idea. It's not my job. But this trade's over for me. Okay, and again, I have to stress, it's not a recommendation. This thing could go down another 100 points. Why not? Anybody know why not? Anyway, and here's on the hit parade. Right here is the target. This is an auction-based level, 60.50. Let me explain what it is, just so you know what we're talking about here. This is high volume, and this high volume was created over in here. And the way to think about the way the market tends to work is it goes to high volume in all time frames. So this 07 from yesterday was the target coming down. We didn't get there. Then we gapped under it and we came back. We could have stopped here, but we had that 67% probability of filling the gap. So, come up in here. And there's no precision. Could have kept going. But once we get the shorts, then what are we looking to do? Come back across the range. And because the ETH high rejected all of this, ETH low. It's logic. Which was this. And if I get under the end, there were stops here, which were there. You see? So once I get under here, this outside edge, which is called a low volume, microcomposite low volume node, my next location is here. So under there, because of stops, to there. Then helmet. Now, it's done, and I'm not saying it is, and there is another reason for this. This is a value area low from this day. 70% of the volume took place here. This was in excess. We had trapped the shorts and squeezed them. So I know this is a big level. So that's why it was my target. And again, from here, no clue. Do you guys have questions? This is TraderLab. This is trading the auction. And like everything else, who knows? How we doing? Everybody conscious? There are some days I wonder if I am really conscious, but I just follow the plan. The idea of a trade plan is not ever to ask, what should I do? The answers are in the plan. So what's this? Resistance. What's this? Support. Let's see what it does. Now for me, finito. Not saying, and it doesn't mean it won't continue lower. We are in a bear market, in case nobody's noticed. And this can just keep going. Just saying. Questions, guys? Hope we're doing all right here. So we have resistance, and this is support, okay? If I break below this, then I have something to think about. Location. Now, here's the other thing about this. If I come down under here, I have to see if the buyers that are here re-engage. In other words, if I don't know what's under here, let's say there's stops under here. Buyers, there's going to be traders that are going to buy this thing. That's fine. They're probably very good at picking the high or low of the day. Me, not so much. In other words, I'll target But I don't go, oh, I'm going to buy it here unless there's a reason, And for me, there's no reason to get long here in my plan. And it doesn't mean this isn't the low of the day. I certainly don't know. Does that make sense? And how we doing in YouTube here, guys? Are you guys conscious? Always thinking maybe I should send the ambulance. Yeah, Costello, did I answer your question on the IB continuation trade, the structured trade there in TraderLab? This one? This here. So this is a structured short TraderLab. You could learn this in the lab. You could also learn order flow and how to integrate it with the auction, putting these pieces together so you could actually learn how the market works, why it does what it does, and how at times you get in alignment with it. And we're all going to take stops, so we got to get over it. This is what the 60 PDFs look like. These are just examples. These are actual trades. I took live trades, and some are just screenshots. And a bunch of this is research that I was doing with Bookmap developers. This is like from 2020. So a lot of this stuff is just not material. A lot of this is just, like I say, I was working on things with them. Again, another one. 2020. Anyway, there's 60 of these. Some are order flow phenomena. You're welcome to them, but you have to reverse engineer them, do a proof of concept on them, and regretfully for all of us, nothing in trading is mechanical. You guys have questions? Throw them in there. I got some. Hold on a second. Trying to open this up a little bit. Guys, I'm trying to get this chat opened up in YouTube. It kind of giving me a little trouble. It's open, but it's scrolling off here a little bit. So you're good, Costello? Okay, great. So again, for me, I'm done for the day unless something else comes up, after the stream. So now you guys, here's another thing to think about. Are you an hourly worker and you have to be busy? Or are you someone who is strategic and wants to take advantage of the traders that are trapped on the other side? What I always think about, and I kind of came up with this many years ago, probably in the mid 1980s, I think it was. I'm trying to remember. Mid to late 1980s, I built trading systems across many asset classes, and I built. I'm trying to give you an idea. We all get stopped out, we all get run over, and whatever happens, happens. But I started thinking about stops, and I mean, we all think about them, but using them, understanding that retail traders all behave the same way. It's like lemmings. And that's because of the psychological aspects, the looking for certainty, and so stops pile up at logical locations, like here. And or under this, stops. So when we get counter rotations, by the way, this is resistance too. You see it? Just saying. Support, and the stops are over the swings. So at some point, I'm going to get a counter rotation, right? Well, where's the stops? Aren't they sitting here? So would I be selling this? Wouldn't I want to be getting out so I can now, what do I have in this leg right here? Well, shorts. And how does the market work? Market goes down to go what? Up. Why does it go up? Because if I run out of sellers, which was right here, and you could see it, then the possibility, and it's always maybe, is to come back and the buy stops in this leg, these guys become buyers. So if they become buyers, we can squeeze. To where, we don't know. Okay, so for me, unless something changes dramatically, and it's not a recommendation, I'm going to be looking at squeezes to take stops out of the weak sellers for potential continuation with the trend, unless structure gets violated. Then I got nothing left to do. Does that make some sense? So right now I'm not seeing the sellers, I'm just seeing short covering. Maybe. I'd say maybe because I don't know. Notice where resistance is. Notice the icebergs are back in. You see the icebergs. And this is not a short for me. So you're going to say, Tom, this was, you were going to, right? You could have added here. Why wouldn't you do it again? Because now I've got buy stops here and I have these shorts. So here's what I know. I know I can come up here, rotate. Of course, it could do anything. It could take this out, keep going, right? One possibility. But this is my primary target. Doesn't mean it's the low of the day. If I can't get back above here, I can rotate and test here. I personally, and it's not a recommendation, what I do is not necessarily material, would not be selling this here. So that's it. This is an outside edge, low volume node. So this can do this. This is your microstructure. This is actually support in here. So as I go down in time frame, I have too high, too low, and high volume. This is like your retail price. It's right there. So it's like a, so this is too high. This is high volume. And again, I would not be taking any more shorts because I've hit my target. So I don't think much about it. And remember, I can keep going, or the market can. It's not up to me. So this is a auction right here. You can see it over here in the profile. I'm not paying that. Yeah, but it's on sale. High volume, retail price. The way the market works, these rotations are auctions. So it's like, you got to be kidding. I'm not going to pay that. All right. Really? But it's on sale down here. Fair price. That. So the high volume, let me adjust this a little bit. 1 second, guys. It's a little too sensitive. It's showing me too much information, which I don't want. So I'm going to have it. I'm going to adjust it, just the sensitivity. That's what I'm adjusting here. Because this is the high volume. This is the outside edge. This is a little bit of high volume. That's why it's sitting there. And there's another low volume outside edge. It's over here. But what's important here is this, and that. So I can look at this and I can go, well, that's too high. Well, we know that's too low because it's the low of the day. So I'm in, right now the market is doing this. So, and this is the fair price. So what it can often do is it's going to rotate around a fair price. And it's doing, now the trend is down, don't forget. So I don't have, so I'm just talking about me again, my time frame. No longs, only covering when I see a long. And if I want, subject to my plan, this is resistance. So I can be operating here, but this is there's no range, you see. So I can read it. But here's the other thing about understanding structure and auction and how the market works. It's time frame specific. So if let's just say the range on a structure like this is 40 points, you're going to see the same behavior. Or it's 4 points, you're going to see the same behavior, you see. Anyway, this is your outside. And again, this is not something I would do, maybe. For developing traders, definitely not. Now, you could use this as trade management if you want to stay short. Or if you're using auction-based levels, you could just take this and be done. See? What's your plan? I'm not saying, I cannot tell you that this is the low of the day. But I can tell you that I understand why it's important and why, if we can't get below here, and we might break under it and then come back above it, that's the same. Test, because the buyers are here. So these buyers here, there's the sweep. If we get below here and then come back, all it means is the buyers that are here did the buying. We got some stops out. weak retail buyers who knows, sell stops will be under here. And if I get under here and they're absorbed, then I can squeeze. That's what I know. So anyway, I'm just trying to say to you is this, you can I want you to see structure because you can learn this in TraderLab. It's not predictive. Trading is not predictive. The idea being knowing what's going to happen is really based in your need to avoid pain and your self-esteem, and it's tied up in your ego, which has nothing to do with this business. So our business is really a statistical business based on edge and probabilities and a random distribution of outcomes. Our nature is to make it something that it isn't. So that's all I can tell you. Look at the behavior. Do you guys have questions? How are we doing? Yeah, you're welcome, Costello. By the way, Costello, if you're not in the TraderLab, you should use the link in the bottom of YouTube. In fact, all of you are visiting in YouTube. If you're not in the TraderLab, you might be missing a terrific opportunity to, shall we say, extend your understanding of what the business is, market mechanics. Also, the TraderLab's a group of like-minded traders have come together to leverage their collective experience. There's a lot going on in here. Data mining, algo development. It's high level. It's strictly about the business. It's not romper room. I'm sure you guys have been in chats and whatever. This is not Fantasy Island. All those things you see in YouTube are from the influencers. The only one thing you need, how I made $1 billion with 25 cents. By now you probably, hopefully, have kind of determined what do they say? What is noise and what might add value? Now here's the catch-22. The catch-22 of our business is everything has random winners. When you open, and this to me kind of dawned on me, I'm just maybe a slow learner, but I started in 1980. The technical analysis, as you know it, was primitive. 1978 is when Wells Wilder came out with his book, and I shared an office with George Lane, who created stochastics. So I thought oscillators, that we did find the Holy Grail. But so all these indicators started coming out. My first really advanced platform was the CQG. So I had CQG. Their first iteration was called the TQ 2020. Just so those of you who might be interested, but you're probably not. But so all indicators had winners, all of them. And it was like, well, maybe if I put a couple together, I'll have more winners. I didn't understand that I was introducing randomness in a random environment. I was trying to squeeze risk out and create more certainty. It's human nature. We all do it. What I didn't understand was by introducing more random inputs in a random environment, I created garbage. So I always had winning trades. Always. But there was not an edge. It was random distribution of outcomes, winning trades that did not have an edge that would favor me. So just like when we trade with an edge, we're going to have losing trades. You're also going to have winning trades without an edge. But with an edge, you're going to have winning trades and losing trades also. But the edge leans it towards you, but in a random distribution of outcomes. So when we have winners, we kind of think all we got to do is make it better. That's not it. That keeps you in a place I call trader Groundhog Day. Work hard, wake up in the same place. Tune, tweak, squeeze. Great. Look at that. We see patterns and they seem to work and we trade them. But let me ask you this question for this astute group of traders. Suppose you have a pattern that you see over and over and over and you start trading it and you have winning trades with it. But over a random distribution of outcomes, let's say 30 or 50 trades, you lose with it. Would you keep trading it? Though, when you see it, it works a lot of the time. I hope you're going to say no. Well, if you say no, then if you don't know which trades you take that actually favor you versus the gamblers, if you will, you're sitting with the gamblers. How does that create sustainability? in a business that's 100% random. Notice. Now, again, this is an important level. If we get below it, we continue on our merry way, not a recommendation. We can test this. For me, done. Not a recommendation, naturally, because it can go to zero. So, okay. And if it does, I have other ways to get in the trade. You see? But I don't know if this is the low of the day, do you? So if we know we don't know, what are you going to do? How about solving for what you don't know? And that's why trading is so difficult for us as humans, because we are wired to avoid risk. I mean, from the primal level. Think of it this way. Why did our species survive? Because let's just accept for a moment that we have a reptilian brain under our consciousness. Consciously, we want to do the right thing. I'm not going to bail out. I'm not going to move my stop to break even when I shouldn't. I'm not going to skip the next trade. Gee, I took 2 stops. I'm going to wait so I can be sure, right? Risk avoidance, risk avoidance, risk avoidance. Great. For survival, avoid the saber-toothed tiger. Do you know your primal wiring cannot differentiate between uncertainty? So what does it do? It looks for certainty. Or what are we certain of right now? How about nothing? Well, if we can't be certain, then we got to solve for uncertainty. You see? What is uncertainty? Statistical probabilities. That's edge. So how do casinos operate? They solve for uncertainty by only playing games that has the statistical probability that favors them over a random distribution of outcomes. My friends, that's the business you want to be in. Now, if you want to create a career path in this business, you probably are not doing the things that are going to get you sustainability. You are doing the things most likely to get you random outcomes, but no edge. Why? Because that's what over 95% of failing retail traders do. They all do the same thing. And what I found, now I started out, don't forget, I was not a retail trader. But I had to build things because there was no information. All my friends were floor traders. And I started to mention to you about 1978, I started in 1980, but 1978, technical analysis as you know it today was considered voodoo. It was looked down upon, aggressively, because at that time it was fundamentals, economic reports. If you guys ever watched Trading Places with Dan Aykroyd and Eddie Murphy, it was Beeks and the crop report, the juice report. So it was all fundamental inputs. Now we still get fundamental inputs today, of course, but we're using tools that never existed before. So it's really changed the business. But when I started, it didn't exist. Technical analysis was in its infancy. So it was really disregarded. And when I say voodoo, I mean it literally. Voodoo. It was just nobody bought it, you might say. I did. But going down the path of mathematics and building trading systems, pork bellies. I've traded pork bellies, everything. Matter of fact, my first trading was in the grains, actually. So I started in the grains because I was brought into the business by one of the largest grain traders, wheat traders in the world. And so anyway, different conversation. But anyway, guys, if you're interested in TraderLab, I think it can help you on your journey. Use the link in the bottom of YouTube. You can join TraderLab, but it's only for serious traders. It's really not, we have a few comedians, but pretty much it's all business, okay? And you will not be insulted, your intelligence, I should say. You will have to open your mind and change your beliefs, because we bring beliefs here, and we're going to try to craft this business about what we believe based on our life experience here on planet Earth. This environment, you've never been in this environment, so you don't even know how to behave in it or how to operate in it. You might be able to learn that in the TraderLab. And you all have an invitation. You can use the link in the bottom of YouTube. There's no cost for TraderLab. Currently, you don't have to be a Bookmap subscriber to take advantage of it. Also, there's a library of webinars that you can review. Start with the primer webinar. It's got over 38 or 37,000 views. You can download 60 PDFs, but you have to reverse engineer them. There is no plug and play. Don't we all wish? Don't forget to give a like on your way out. Thanks so much for visiting TraderLab today. Hope you got something from today. Remember, it isn't plug and play, and there's not one way to trade. But you need to understand how the market works, why it does what it does, how to get in alignment with it, build out a trade plan that has a statistical probability, and then develop the discipline to step in front of your fear, manage it, and grab something tangible other than your emotional state, and that's statistical probabilities. You can touch them. When you don't have something tangible, all you have is something emotional, and your emotions are not your friend in this business. It's why most traders, in my opinion, go out of business. Thanks again, guys. Don't forget to give a like. Hope you got something from today. Feel free to visit TraderLab. I'd look forward to meeting you there, and I'll see you guys soon.